Hey everyone, welcome back to Corporate Decoder, the place where we untangle the confusing world of corporate filings. And if you're ready to talk about shareholders and stock conversions, it's going to be a wild ride. Today we're diving into a filing from Playboy Inc. and it looks like there's been a pretty big shift happening behind the scenes. This isn't your typical financial report though. It's more about a specific event that fundamentally changes how their ownership is structured. So let's crack this code and see what it really means for the company and its investors. Alright, so the main event here is pretty straightforward but has some important implications. On August 22nd, Playboy Inc. finished converting all of its remaining Series B convertible preferred stock. Now what does that actually mean? Well, imagine you have a special type of stock, this Series B stock, that is designed to be changed into regular stock later on. And that's exactly what they did. They took all 21,000 plus shares of this special preferred stock and turned them into over special type of stock, this Series B stock, that is designed to be changed into regular stock later on. And that's exactly what they did. They took all 21,000 plus shares of this special preferred stock and turned them into over special type of stock, this Series B stock that is designed to be changed into regular stock later on. And that's exactly what they did. They took all 21,000 plus shares of this special preferred stock and turned them into over 12 million shares of their everyday common stock. This conversion happened at a specific price of $1.74448 per share. The key takeaway is that after this conversion, Playboy Inc. no longer has any of that preferred stock left. It's all common stock now. Think of it like exchanging a voucher for the actual product. Everyone who held that preferred stock now holds regular company stock, and they did it on a pro rata basis, meaning if you had a certain amount of preferred stock, you got the same proportion of common stock based on what you held. Interestingly, the company didn't get any money for this conversion. It was more like an internal housekeeping item, changing one form of ownership into another. The shares they issued, the common stock, were issued as restricted stock, and they're saying this was done under an exemption from registration, meaning they didn't have to go through all the usual hoops and paperwork to register these new shares with the securities regulators because of a specific rule in the Securities Act. Now, following this big conversion news, Playboy also issued a press release on August 25th, just a few days later, to share this information with everyone. They're telling us that this information, including the press release, is being furnished, meaning they're sharing it, but it's not officially being filed in a way that makes them strictly liable under certain parts of the law. It also means this information won't automatically be added into future filings unless they specifically say so. It's a bit of legal fine print, but basically they're letting you know about the news, but also mentioning some of the specific rules and how this disclosure fits within them. And as a standard practice, they've included a bunch of cautionary language about forward-looking statements. Essentially, this is a disclaimer saying that any statements in this report or the press release that talk about the future, like what they anticipate or expect, are based on their current beliefs and assumptions. These can change and actual results could be very different due to various risks and uncertainties. They're basically saying don't bet your house on what they think might happen. They mentioned that if you want to know more about these risks, you should check out their other filings with the SEC, like their annual reports. They also make it clear that they don't plan to update these forward-looking statements unless the law requires them to, and people shouldn't place too much trust in them. It's all about managing expectations and covering their legal bases. Finally, they list out their exhibits. The most important one here is Exhibit 99.1, which is that press release we just talked about. And buried at the very end, you have the signature block showing that the report was officially signed off on August 25th by Chris Riley, who holds the title of General Counsel and Secretary for Playboy Inc. This filing is essentially a formal announcement to the public and regulators about a significant change in the company's capital structure. So what's my take on this? Well, this filing is all about the restructuring of equity, specifically the conversion of preferred stock to common stock. It signals a significant step towards simplifying the company's capital structure. No longer does Playboy Inc. have the complexities of different classes of preferred stock, which can sometimes come with special rights or preferences for those shareholders. By converting all of it to common stock, the company essentially streamlines its ownership. For the company, this move can be seen as positive as it removes a layer of complexity. It might also suggest that the company feels it has reached a certain level of stability or confidence in its future, making the conversion of preferred stock feasible and desirable. It could also be a precursor to other strategic moves like a potential sale, merger, or simply a cleaner balance sheet for future fundraising. One of the key things to note here is that the conversion didn't bring in any new cash to the company. This isn't a fundraising event. Instead, it's about cleaning up the existing ownership structure. For the holders of the Series B preferred stock, this was likely a good outcome as they are now the owners of common stock, which typically offers more liquidity and direct participation in the company's success through stock price appreciation and potentially dividends. Though dividends are not mentioned here, the fact that the common stock was issued as restricted stock under an exemption is also worth noting. While it simplifies the process for the company, for those receiving these shares, it means there are limitations on when and how they can sell them in the open market. This is a common practice to avoid flooding the market with newly issued shares all at once, which could depress the stock price. Looking at it from a valuation perspective, while this filing doesn't contain detailed financials, the conversion price of 1.7444874448 gives us a small clue. If we assume this conversion was done at a fair value, it suggests the market, or at least the terms of the preferred stock, so the common stock as being worth around that price point at the time of conversion. However, without seeing the company's overall financial health, revenue trends, or profitability during this period, it's hard to say much more. We'd need to look at their regular financial reports, their 10Qs and 10Ks for a complete picture. The risks mentioned in the cautionary note are standard but crucial. Companies like Playboy operate in industries that can be subject to changing consumer tastes, economic downturns, and regulatory scrutiny. So while this equity simplification is a cleanup, the underlying business challenges and opportunities remain. In conclusion, this filing is a significant, albeit technical, step for Playboy Inc. It simplifies their shareholder structure and removes preferred stock from their books. It's a sign of tidying up operations and perhaps preparing for future growth or strategic actions. The real story will be how the business performs after this restructuring, which will need to follow in their more detailed financial filings. Alright, that's our breakdown of Playboy Inc.'s latest filing. What's your take on this equity conversion and what it might mean for the company's future? Let me know your thoughts in the comments below. If you found this analysis helpful, give this video a thumbs up and subscribe for more of this discussion and insights. Thanks for watching, and I'll see you in the next one.